Welcome back. Last time we ran out of time. Imagine Emily and I like to talk a little bit too much, but we still have a lot of great content. We're going over the second half of our Auto Insurance 101, the breakdown of the auto policy. So thanks for joining us again, and we'll get straight to the content. I'm going to talk about tort selection, just only because it's so much fun and it's not confusing at all. The state of Pennsylvania has a pretty unique section of the auto insurance policy, and it's called the tort selection. I've never seen this in any other state, and I've had, I'm pretty sure, close to 3 million questions on the tort selection, just because people don't understand it, and I don't know if a lot of agents do a good enough job of explaining it. And most people just sign, where we tell them to sign, unfortunately, and they just go with what they have or with whatever's cheaper. There's two types of tort. There's two tort options that you can select. One is limited tort, and the other one is full tort. A lot of people confuse full tort with full coverage, which I think we talked about before in a previous show. Full coverage is kind of a nebulous thing. It's everybody has a different idea of what it is. Full tort coverage pertains to your uninsured and underinsured motorist coverage and your ability to make a claim against someone else. If you have limited tort coverage, you're obviously limited in what you can make a claim for. So we're just going to paint a picture for you. You're driving down the street in a 25 mile an hour neighborhood, and the person behind you is on their cell phone, thinks that you stopped and took off at a stop sign and bumps you in the rear. You have, let's say, $1,000 damage to your car, but your neck hurts, and you go to the doctor. Doctor tells you that you should go through physical therapy for, let's say, 4 or 5 weeks. If you have limited tort, you can get your medical bills paid for by the other person's insurance company. You can get your medical bills paid for through your MedPay, and then that's all you can get. If you have out-of-pocket expenses, you can get that reimbursed as well. But other than that, that's all you can make a claim for. If you have full tort, you're not limited at all. So you went through those 5 weeks of physical therapy. You had some pain, you had some suffering. You can still make a claim for that against the other insurance company. It doesn't matter. There's no threshold to the amount of injury you have. The threshold is actually called the serious injury. So if you have limited tort, you can't get pain and suffering until you pass that threshold, and that's a serious injury. Now, what's that? Do you know what the definition for serious injury is?
I don't know it off the. I know it's. It has to be you're missing limbs or something like that. Yeah.
There's not really. Serious injury is not defined anywhere, so it could be.
It's the courts, kind of.
That's what it comes down to. So, this is a situation where, at least with the tort selection, limited tort is definitely less expensive. How much less expensive depends on a variety of factors, but it's definitely the lower cost of the two. But there's something that you're giving up with that. Now, I've had a lot of people say, well, I'm not a litigious person. I don't like to sue anybody. And if that's the situation for you, then and you're okay with not being able to reclaim pain and suffering from a minor injury, then limited tort may be an option for you. But full tort, you're not giving up any of your rights to make a claim for pain and suffering. Limited tort does have a few situations where you can pick up pain and suffering. If you get hit by a drunk driver, if you get hit by an out-of-state driver or an uninsured driver. So
or something completely serious, like Walt said.
Right,
yeah.
or a very serious injury. So you're not completely giving away your rights there. But that's what tort selection is. It's not as complex as people think it is, but it's usually explained in terms that people are like, okay, whatever one's cheaper.
Yeah. I do want to say, though, this coverage is one, at least I know Walt and I, leave optional, to our clients. It is your choice and your choice alone. I don't suggest one or the other. It's your opinion. If you want to sue just for your monetary, property damage, medical bills, things like that, and you're okay with that, then get limited. But if you want the right to, sue for pain and suffering, then definitely go full tort. It's an opinion thing. I really don't say you should have one or the other because everybody's situations, like Walt said, is all different. So don't get bullied into one other. Really think, okay, do I want to sue for this or not? And like he said, there are situations where you're given full tort in the court system. Even if you do have full tort, doesn't mean you're always going to get it by the judge as well, too. So you always just briefly sit with your significant other, your family, and say, okay, would we want to do this or would we not want to? So I just want to say that.
Yeah, and I'll just add on to that. We all throw sue around a lot, but most claims are handled by a claim adjuster. Mm-hmm. It's very rare that you see something actually go to court. So if you have full tort and you're going to make a pain and suffering claim, usually you're not going to have an attorney file a lawsuit for you. I mean, mm-hmm. It's a situation where you're making the claim for pain and suffering. We don't want to just say sue and have everybody assume that they have to get a lawyer and sue. Whether you get an attorney or not, that's entirely your choice. But when we say make a claim for pain and suffering, mm-hmm. we mean actually making the claim. Now, where it goes from there, how it's handled, or who handles it for you, that's entirely separate. But your right to at least make that claim is what's held in the balance of your tort selection. Emily, do you want to talk about extras?
Yeah, so a lot of insurance companies have a lot of extras on policies. There's accident forgiveness, the preferred shops, like I mentioned before. Every company has a list of shops in your area that they consider their preferred. They're all titled differently depending on that company, but usually if you go to use one of these shops, then your repairs are guaranteed for life. So why wouldn't you go there? In my opinion, it's handled straight through the company. Again, repairs are usually guaranteed for life. I think it's the best out of all of it, obviously. And then there's, new car, better car that we talked about, glass deductible, zero. I mean, there's a whole slew of extras. Some of these may be really important to you, some are not, but it's good to know what's available. And like I said, every company is different, so I can't tell you can get this and this and that, but ask your agent, what are the extras? What other coverages could I get? Because, new car might be really, really, something that you want to do, or have your glass deductible be zero. Or I know one I work with a lot within my company is called Employee Parking Guard, which protects your car when you park in a parking lot, things like that. So when there's a higher risk involved. Obviously, a lot more cars parking. You don't know how people park. I mean, you see those pictures all the time. Please park better, on the internet.
How about people that get upset with you at work because you made a bad call? I'm not naming you in particular. I'm just saying.
I have not touched your car.
They go out and they use their key not to open your door, but to put something nice on the side with something like Employee Parking Guard. Your deductible gets dropped.
Yeah.
But you can take a look at your policy, and usually you'll see everything that's available. And that's sometimes you only see what you've chosen to take, but a lot of times you'll see everything that's available, and just the items that you have chosen are selected. But there's a lot of extras. The thing about the extras on an auto insurance policy is they're usually very, very inexpensive. Mm-hmm. So to add something like $12 a year to your policy, but to get a huge benefit in the case that you have to use it, it's typically a no-brainer. Unless it's I don't even know what somebody offers that is just completely outlandish.
Yeah. Usually the extras are not that, you have the bulk of your payment unless maybe you have them all.
Right. But even then, I mean, if it's $50 and you have this package of, great features, mm-hmm. It's definitely worth considering, and, find out what your insurance company can do for you, mm-hmm.
Mm-hmm.
What they offer. Because most people, they buy their insurance and then they forget about it, and that's kind of one of the reasons we do this show. But most people do. They don't think about their insurance. We think about it because that's what we get paid to do every day. We get out of bed thinking about tort and liability and what people need. But most people don't do the same thing, so they're not thinking about it. You pay the bill every month, and it's like the cable bill. You forget about it, and a lot of things come up. I mean, we roll out new features on a fairly consistent basis. And if nobody calls you or your agent doesn't call and say, hey, we have this great new feature, would you like to add it? It's only going to cost you $6 a year, 50 cents a month. Sounds pretty awesome. Sure, I'll take it. That usually doesn't happen though. So do a little homework. I mean, look at your own policy. Maybe even look at your carrier's website and see what little extra added features they can throw in there.
Yeah. Insurance companies love their extras. And some companies have things that are only exclusive to that company. So if you go on the website, like you said, they're listed. They want everybody to know they're the only company that does that, or that they do this extra feature. So commercials, websites, if you want to do research on your own, it's very easy to find what they do extra on top of the policy.
All right. I have one last thing I want to say before we get off of extras is I want to ask you a question.
Uh-oh.
Last time you went to a steakhouse.
I don't go to
I'm not asking when.
Okay.
The last time you went to a steakhouse, did you look at the menu and say, give me this one? Or did you just say, just give me the cheapest one?
I like that analogy.
Yeah, you picked from the list.
What I wanted from the list.
Just getting the cheapest insurance is not always the best situation. This is something that it doesn't drive me crazy because I know a lot of people are price sensitive, but it does. I wish price wasn't such an issue all the time, because you're not going to buy the cheapest steak. Most people aren't just going to go in and say, just give me the cheapest steak that you have. Or when you go to buy a new car, you don't say, just give me the cheapest one you have. You start decking it out with all the extras, and you don't like this color, so you have a special order this color because it's your favorite. But price comes up, but it's one factor among many. With insurance, it's one factor among many. I mean, a much more important thing is, what are you doing to protect yourself and your family in the case of a loss, especially with the liability insurance, but then with the first party stuff as well. You want to make sure that you and the ones that you love and care about are protected when they're riding with you. So it may cost a little bit more to increase your limits a little bit. Have one less cup of coffee from the barista every month, and you've paid the difference. I mean, literally.
Oh, yeah.
If you're talking a few dollars here or there, even on a monthly or yearly basis, versus being stuck holding the bag on a large claim, or being sued and not having enough insurance to cover it, you'll kick yourself. I mean, if somebody has $25,000 of coverage and an attorney's ready to settle for $100,000, and then they see your limits, that's going to be a bad situation for you, because if they end up getting $100,000, $75,000 of that's coming out of your pocket, and it could have been the difference of $900 a year and $960 a year, but that $60 just cost you $75,000. So definitely consider price, but don't shop by it. Shop by what you need, and then anybody worth a lick in this industry will be able to work with you and tailor what you need. But the most important thing is the coverage, and making sure that the things that you have and the people that you love are covered. And that's
yeah,
the
you
most
work hard for
important
your
thing.
car and your house and all the nice things you own, and hopefully you love your family and the people that live with you, and you want them to be protected. So it's very, again, price is a huge thing. I would be lying if I said price didn't matter to me too, but I made sure that I'll pay $20 more for something a year than pay $2,000
Right.
Every month or something like that if it happens. So yeah, I think that's a good talk.
Hello, America. Mr. Bold speaking. I issued an ice bucket challenge to my good friend Darth Vader, and given his ego and celebrity status, I was sure that he would take the challenge. But if he doesn't show up in the next minute or two, I'm gonna have to do it myself.
I find your lack of faith disturbing.
Nice towel. And I said a bucket challenge. That's a cup.
Don't make me destroy you.
You're such a show-off. What are you waiting for, you big sissy?
It is pointless to resist.
I can't believe you just force-soaked me!
All too easy.
You're not such a bad guy after all, old buddy.
Apology accepted.
The Ice Bucket Challenge has done a great job of raising awareness for ALS and many other noteworthy charities. If you have an Ice Bucket Challenge or some other cause you would like to bring attention to, Darth Vader and yours truly, Mr. Bold, would like you to come to BPTV and will gladly help you make a program or promo or share your existing video with the community.
We would be honored if you would join us.
We're going to get into our social media questions. We got a lot of Gmail. We're not going to go over the questions that were, how come you guys don't talk about things more basic?
Yeah, because we did.
So that's what this show was about. We do have a few specifics. Emily, I'll let you go first.
So Dave, his question was very short and sweet. So what is full coverage? We mentioned a little bit before that full coverage is a term that does not really exist. There is no full coverage and not full coverage. But what people like to refer to is liability only, or liability and obviously having collision and comprehensive coverage. So that's the difference. You know, a lot of people think full coverage, they have it all, but sometimes you do and sometimes you don't. So you want to make sure that if you do want full coverage, whatever it is, that you do have comprehensive collision. Obviously, you have to have liability. That's a state requirement. But then as well, with comprehensive and collision, you know, what are your deductibles? If you have full coverage because you want that, but then your deductibles are $5,000 each, I don't think anybody really can afford, you know, every time. I mean, maybe you can. I don't know. But, you know, you'll have that coverage, yes, but when you have to make a claim, you can't turn it in because you can't pay that, you know, $5,000 deductible. So full coverage and not full coverage, just, you know, if you don't want collision and comprehensive, which, again, I said always keep comprehensive, it's considered liability only. So I don't know if I would use the word full coverage ever.
Yeah, I try not to. And especially in Pennsylvania because we have the full tort and the limited tort option, and people confuse the two. And then another thing to consider, if you have a loan on your car, usually in almost all cases, the bank makes you carry comp and collision, but they also tell you how high your deductible can be. And it's usually $1,000. So if you have a loan on the car, you're probably not going to be able to get a deductible higher than $1,000 just because of the bank. They want to make sure that
the car gets
their
fixed.
asset can be fixed.
Yeah.
Well, good stuff on that one. I've got Alfonso from South Park. And his question is, I want to read this in a funny voice, but at the same time, why should I care if someone else is underinsured? So why should you care if somebody else is underinsured? Because it affects you directly. If somebody is driving around with state minimum limits, as is their right in the state of Pennsylvania, if they have the cheapest insurance they can possibly have, you probably assume that they don't have a lot of assets that you could tap into if you had to make a claim against them. So where are you going to go? I mean, you're going to go back to your own insurance policy, and that's why we have uninsured and underinsured motorist coverage on the policy, and that's why we recommend that you take it. So the reason that you care if somebody else is underinsured is because it directly affects you. You don't care about their comp and collision. That has nothing to do with you, but their liability coverage that they're carrying, that is directly related to you and every other person on the road. So I've seen many claims where somebody was on a bender and they were driving down the street Pittsburgh streets, imagine this. There's cars parked on the side of the road, and, they hit 12 cars, and then they have $5,000 total to cover the damage to all those cars.
Not going to happen.
There's no way you're going to repair all those cars for $5,000. So you go back to your own comprehensive or collision coverage, and you're out of pocket your deductible. Now you may be able to get your deductible back, but like I said, $5,000 you're not going to cover all those cars for. So it's a good question, Alfonso. But yeah, you should definitely care what other people are carrying, but you care about that in your own policy.
And that kind of leads me into a question that Jane wrote in. Why do I have to pay my deductible if the other person is at fault? So say that person is at fault, but it was hit and run. We don't know where that person is, or what their policy, carries. So you would go back to your own. And unfortunately, anytime you do go back to your own insurance company, you do have to pay your deductible. Just kind of how it works. So make sure when you do pick your deductibles, it's something that you could really pay out of pocket. Don't get that $5,000 if you don't have $10,000 possibly sitting on the sidelines. And then if they do, find the person, obviously if that person is responsible and you did get their information after an accident, sometimes your company will waive your deductible, not even, have you pay it, because they'll get it back from the other company. If they have an agreement and there's a communication going on, they'll say, don't worry, we'll get our money from them. Don't quote me on that. Some insurances do though. But typically what happens too is you never really pay your deductible. You don't have to send in $100. Just when they issue the check for any kind of damages, they just take that amount out. So say your deductible was $500 and the repairs were $2,000. They will just give a check for $1,500 to you. So it's not like you have to hurry up and come up with money right away. It's something that kind of gets worked out through the payment process.
In some cases, like we talked about the preferred shops. Like the insurance carrier has a list of shops that they work with, and they know their work and they guarantee their work. Now, you go through your own insurance company and you go to one of those shops, before you pick your vehicle up, you are going to have to pay that deductible. Mm-hmm. So just to make that clear, and in a lot of cases, if you have another party that's at fault, but you want the guarantee that your insurance company offers, it's going to be a lifetime guarantee as long as you own the vehicle. Who doesn't want that for free? So the other insurance company of the person that's at fault for the accident, they may front you your deductible because they know that they're going to be paying anyway. They'll send you a check for the $250 or the $500, and then you can just add that in, so you're not coming out of pocket. Mm-hmm. So that's a good question. All right, Marilyn from Bethel Park sent us a Gmail, said, why did my rate go up when my kid got his license, but not for his permit? Parents,
full drivers.
Parents, before you write a question like that, take a look at your kid's room. And I can speak from experience because I looked in my kid's room before I left this morning. But take a look in their room and look how their own things are, and then think what they do with your car when they're driving. Youthful drivers, that's anyone under age 25. Mm-hmm. So you hear about the breaks that you get in your insurance policy. The two big ones are turning 25 and when you get married. Apparently turning 25 makes you more responsible, and getting married makes you more mature. I beg to differ, but that's just kind of the way that it goes. The reason that your rate didn't go up when your son or daughter, your kid, got their permit is because there has to be a licensed driver in the car with them, and they're not really a licensed driver at that point. So they may never get their license. I didn't pass my driver's test the first time.
Oh no!
so I went 13 months with the permit. So in that 13 months, I wasn't driving the car by myself, and there was no chance of that happening. And when I was driving the car, I had a responsible adult in the car with me. So that's the reason we wait until your child turns 16, but until they actually have their license, because at that point they are legally allowed to drive the car without a responsible person.
Yeah, I'll put myself on the line too. I did pass my test, thank God, because it was the day of my prom. I don't know why I did that to myself, but you know, youthful drivers usually, they're just higher risk. And we're not going out and saying you have a bad kid and, you know, they're going to do silly things, but just overall in a greater scheme, they're a little bit of a higher risk. You know, I like to speed when I was younger, you know, so, you know, obviously I don't now, and I didn't before I even got into this field. You know, it just, over time, I decided that speeding probably was not a best thing to do. So that's why they're usually just a little more money, because they make decisions sometimes that, you know, you wouldn't make when you were, I guess, over 25 or just a little bit older, you know. So it happens with every company. You can't avoid it. Unfortunately, it's just, you know, youthful drivers are a little bit higher of a risk, so your premium does go up. You know, they only have a couple months of insurance or experience under their belt, or a couple years, obviously, well, hoping. The older you get, the more experience driving you get, and you're better on the road.
Yeah. Check with whoever you get your insurance through. A lot of times, if they're recent graduates, or if they're going away to college, or, you know,
good student,
if they're a good student,
yeah.
That's a big thing. Some companies have contracts, online contracts you can sign with your child, and it's a discount for not doing much other than making your child promise that they're not going to do anything stupid.
Yeah.
So there's ways to get the youthful driver rate to come down a little bit, but unfortunately, you know, younger people make more unwise decisions than us gray-haired folks. So I hope that answers your question.
I think that's all we have.
Thanks for writing it.
Yeah.
We want to thank you guys again for watching. Our next show is going to be the same thing we did now, but we're going to do that with homeowners insurance. Mm-hmm. So we hope you tune in next time. But for now, to get in touch with us, you can email us at knowtherisk101@gmail.com. Check us out on Twitter. Check out our YouTube channel. Mm-hmm. What else do we have?
Facebook.
A sprinkle account.
I don't know.
Tattoo.
No.
Label. Okay. Yeah, check us out. Any of those methods, you can get in touch with us. Gmail is probably the best way. Just because the Twitter stuff gets kind of lost in the
and it's private too. I know some people like private questions.
Yeah, that's why we don't do last names unless you ask. If you want to be, BPTV famous, we'll name you on here. But anyway, that's all we've got for this episode. I think now you know the risk, and we'll see you next time.
Bye.
Today we'll be discussing strokes. Strokes kill almost 130,000 Americans each year. In fact, one American dies from a stroke every 4 minutes.
Symptoms of a stroke are headaches, numbness on one side of the body, weakness, and dimness of vision. Remember, FAST.
FAST is an acronym for the main symptoms of a stroke. F is for facial drooping. If someone is having a stroke, one side of their face will likely droop.
A is for arm weakness. If a person is having a stroke, their arms will become heavy and slow, or might even abruptly become paralyzed. S is for speech difficulty. Someone having a stroke may not be able to speak correctly or create a clear sentence.
T is for time to call 911. If you believe that you or someone else is having a stroke, seek medical help immediately. Time is of the essence when someone is having a stroke.
Some risk factors of stroke are increasing age, race, high blood pressure, atrial fibrillation, diabetes, sickle cell disease, tobacco usage, and diet.
Eating healthy foods, avoiding tobacco usage, and exercising are ways to prevent stroke. If you are experiencing the symptoms of a stroke, call 911 or 412-833-2000 immediately. For more information, go to strokeassociation.org.